So Arnaud is going to give us hope on how to analyze what's happening in some of the wildest markets I've seen. Arnaud, welcome back. I've heard the expression that markets top with violence and
Morning, Dale.
bottom with silence. Are we starting to see? I mean, to me, this looks violent. And before we get going with your analysis, I was wondering what you were thinking when you saw, a more than outsized move in the VIX. It wasn't justified by how much the market went down. It was just everyone on the wrong side. What was your reaction when you saw 60 reading in the VIX?
Um, I remember I did a webcast for my members where I said, there's this famous investor who says, get greedy when the others are fearful, and get fearful when others are greedy. And that's pretty much, I can even pull up the slide I had to start off my webcast with it. So that was pretty much my thinking. Though I did give a caveat because that is, of course, by Warren Buffett. And there was a news article that he'd been a heavy seller the previous quarter. But of course, I am pretty sure he sells before things go south. And he's smart and
Yeah.
old and wise enough, I'm pretty sure, to do that. So there was a little bit of a conflict news message there, of course. But otherwise, that's, I think, always the message. Get greedy
Okay. Do you
when
want to
others
share
are
your?
fearful. Even if you're trading for just a bounce, it might work. And
That was I consider that uh, market dysfunction. What the
yes,
VIX did.
correct. Yes.
I don't think it's a great sign that the VIX didn't trend up to 60, but got it all over, and then the biggest reversal in the same amount period of time.
Right.
They didn't pay off trades.
uh,
There's something rotten out there in the market. Could it be?
yeah,
Um,
of course, there are always things going on behind the scenes, shenanigans and
is it
manipulation. But
liquidity?
also, of course, plays a role. We can have a look at that.
Okay.
But most of the time, we simply say a wave on a larger degree completed to the upside, and then another wave
Yeah.
on a larger degree to the downside has to take over. And most of the times, those are C waves. And what we just experienced, which bottomed on August 5th, that infamous Monday, that was most likely a C wave. And they're very vast, fast, and very rapid. We saw
Yeah.
them, for example, in February, March 2020 during COVID. That was also a C wave that went very fast and very rapid after a B wave topped, and the market just simply has a hard time finding a bottom. As they say, there is no resistance in the bull market, neither is there support in a bear market, and that's what you saw. And I personally was looking for, if I go back to the Nasdaq, for all right, July 5th, for a top somewhere around 20,660. I think we got 20,690 now. Don't want to pound my chest on how accurate it is, because I've made plenty of mistakes as well. But I'm only human and trying to interpret this very complicated market to the best of my extent, and that we then eventually would drop, and that's what we did. And then I think somewhere late July or so around there, I was looking for the Nasdaq to bottom at around 18,200, 18,300. Well, we got 17,000.
17 too.
Uh,
Yeah.
yeah, so I was off by 4 or 5%, which
All
is
right.
not very accurate. I got the
Okay.
direction right, but the
All right.
magnitude wrong.
Okay. Well,
Right?
yeah, enough history.
Yeah, enough history. So
Yeah.
let's look at the market. I again, if I
What?
talk about waves, I want to point out that I
Yeah.
apply the Elliott wave for those people who are not familiar
Right.
with it,
Okay.
which views bull markets as 5 waves up, and then corrective markets as 3 waves down. And we apply a Fibonacci world to it, where the waves are related to each other based on Fibonacci extensions and retraces. And Fibonacci is a whole different other story. Please look it up yourself or go to my website, read a little bit about it. But a little bit more history back when I did my interview in May with you guys and with Blake, because I know you were out sick and sounds like you're all better. So that's very good to hear.
May have been
Um,
internet stuff, but yeah, okay, yeah. It's good to
yeah,
be back with you, whatever the
right. Thank
reason.
you.
Okay.
Likewise. No, I always look forward to this. This is such fun to do. And so back then, I was like a little bit thinking, trying to think outside the box of a ending diagonal larger fifth wave.
Yeah.
I didn't see it covered by many Elliottians that I follow, probably only 1 out of 10 or something. So I thought, this is different. Let's kind of go against the grain and against mainstream what people are seeing. And unfortunately, it kind of got blown out of the water. So this was wrong, and I admit when I'm wrong, I'm wrong. And so we were back to a what we call a standard impulse since the infamous October 2022 low. Yeah, that's when the market bottomed. It's already that long, and since then it seems to impulse higher. And I did an interview way back in 2023 when we were looking for a top in about the 5,000 region, and that was simply based again on the ideal Fibonacci target zone for a fifth wave. And the market decided to blast straight through it. That doesn't mean the Elliott wave doesn't work. It simply means that the market has different intentions and it can always extend, and that we just don't know beforehand. I always say, right, we're not prophets. We cannot predict the future. I can only forecast it based on these standard patterns. And here, for example, we have a standard pattern that did work well. We got a top here in the 176 to 200% extension, but it was for a third wave, which normally goes to 138 to 161.8. So okay, that's fine. We're still tracking an impulse lower. So we believe that
So
the low here
you have the
was a fourth
former
wave.
okay. So it
Was a
looks like
fourth wave.
right.
Yeah,
And you have
and that we're
targets.
now potentially in the fifth wave.
I was going to say, I've seen similar targets by other Elliottians, 6,100.
Yes. Yeah, somewhere in the 6,000. There's some people out there that, 2-3 years ago, I would have laughed at them saying 6,000. Literally, me, myself, and I would have said that's ridiculous. Why? Because based on my FIB work, I thought 5,000. But here we are. We're already in 5,600. So be it. That's why we say we anticipate, we monitor, and adjust. It's just like when you're a doctor and you have a patient, you come in and as a patient, he'll assess what you have. He'll prescribe a treatment, and we'll monitor the treatment, see if it works. If it doesn't work, you have to adjust the treatment. There's nothing different to analyzing the markets, because markets are
That's
nonlinear.
why they call it a practice.
Yes,
they're practicing
yes.
on people.
True. It's absolutely true. That's
Okay.
what it is. And it doesn't mean medicine doesn't work. It works
And
wonders.
Elliott wave is a practice.
It is. It is a practice, and it works. It's just that we sometimes misinterpret the markets because the market tries to keep its intentions hidden for as long as possible. But eventually, you figure it out. The nice thing is with Elliott Wave that it's price based, and price is the only thing you trade, and price is the only thing that makes money. So there's no external circumstances. So we don't really have to worry too much about, oh, what if Powell says this or Powell does that. Most of the time, it can be projected by simply looking at price. But that said, going back to your liquidity point of view, so here are two measures. This is the money flow here at the bottom of the screen, the money flow indicator and the Chenke money flow. So both track how much money is flowing in and out of the market. If it's green, it means a lot of money is flowing into the market. And here as well, green. If it's red or below 50, a lot of money is moving out of the market. So what you can see here is that in early 2024, a lot of money was moving into the market. When that happens, eventually you'll get a pullback because you can only put in so much money till it doesn't work anymore, right? If everybody's bought, only selling is left. So you can see now that the higher we go, less money is being put into the market. That's negative divergence. Divergence is a condition; it's not a trigger, because price can just keep on marching higher. But we saw the same things happen before. I can go further back in time, this negative divergence. So there is a liquidity problem. Look where money flow was here. This is typical for a third of a third wave where everybody's bullish and everybody's pouring in money. And now we're going higher, but less and less money is being put to work. And it's, of course, institutions that literally have the biggest pockets, not us mom and pops and private little retail traders.
I wanted to get your view on this, and we're both technicians, Arno.
Yes,
You know,
correct.
uh, I know enough about Elliott to be very dangerous. Okay, but
Hmm.
did you have what's your impression that, over the last month or so, that there's really been a lot of money moving towards risk off assets, bonds. Bonds have outperformed the market. Gold has outperformed the market. Staples have outperformed the market. Um, it seems like maybe the big money can't do it all at once, but they're starting to shift
Correct.
maybe away from what they've been doing for years and into things that they haven't been doing for years. Safety.
Yeah, I agree. I also follow gold and gold miners, but they have been in a longer term bull market already. But it's still bullish. I remain bullish on those, and can see that buying is starting to tick up on that one as well. So that's pretty good. The very risky assets like the cryptos, yeah, they're a little sluggish, though I do expect higher prices eventually. But they've been pretty sluggish. They topped in March, and they haven't gone anywhere since, pretty much.
No, that
That's
correlation's broken down with the market.
yeah, as
Uh,
well. Sometimes they
yeah.
correlate really nice, especially with the tech sector. And now it's trying to reestablish itself. But there were some surprises, especially the August 5th low, which even I was like,
I could
that's
see a few new highs in some of the MAGAs. Like, I think that Nvidia's going to make a new high.
yeah, I
But
think so too.
I'm not sure about Amazon. I'm not
No,
sure
I'm
about Microsoft.
no. Google looks a little sluggish.
Yeah,
Tesla looks a little sluggish. Everything looks sluggish. Like there's not
yeah.
a lot of drive behind
I
it. Some
mean,
of the price action
we might
is
have huge
questionable.
retracements as the Nasdaq makes a new high, if when it makes a new high. Um, but the leadership, um, I don't think will confirm it at 6,100. Do you?
That's a good
Be something to
canary in
watch,
the
isn't
coal
it?
mine for sure.
Yeah,
Let's look at the big leaders. Have they
yeah,
started lagging?
yeah,
Because it's a certain type of market. It's a market environment, and if that environment has changed at the top, it means things have been going on that are either going towards defensiveness. I look at the utility sector, for example. Is that one up, or other very defensive stock sectors? Look at gold and bonds and those things. It's very good to have a wide view and broad view and understanding. Eventually, when you get a market crash, most of the time everything goes down, even gold and bonds. Everything gets
yeah.
sold because anything that's on the books is a risk. But
Right.
that's so much further down the road. And
Does
if you
it
have a
bother
prop,
you that we could be at 6,100 in a month or two? Does
no,
it
it doesn't
bother
bother me
you?
at all.
No, not no. Does it bother you that that there is a plurality at that level? That a lot of people are looking when people are looking for a level, it either doesn't get there or melts right through it, is what I've seen.
It could very well be. It could melt right through it. That's why I have this question mark 5, because this red
Yeah,
wave 5 can still subdivide into, as we see here for red wave 3, 5 green waves,
that's
and
how
we
you
can go
get
to 10,000.
7,000. Yeah,
Yeah, it could.
yeah.
It might as well. We could just stall at 559.57 here. There's resistance at the pivot 59.50, and that's it. And everybody that was looking for 6,000 just didn't get it.
How about the Russell? That's where everyone's been looking for the exponential gains this year. That's been nothing
Mm.
but a disappointment, especially
No,
that last pullback after breaking out and sucking in a lot of money.
yeah. So I track it through the IWM, the ETF.
Yeah,
It is a very messy advance, and we still view the advance as either completed, as you can see here, that it's working on a 1, 2, 3, 4, 5 lower already, or we're in a very ugly ABC advance of a larger B wave that will top out somewhere for the IWM at around 230, 235 ish. This has been a pretty disastrous price action since March, similar almost to the cryptos. This is pretty disastrous.
yeah.
It just
Especially that up and down, just like the VIX did.
Yeah, it's up and down. This was a very nice setup here, and
Yeah,
3 days later,
yeah.
it
three
really look at these
days
3 days
can
completely
make
fell out
a
of bed. It
month.
probably
Yeah.
wrecked a lot of stops. And stops are good. Stops, you must have always a stop in place, because what if the 200-day didn't hold as support, and then there would have been a lot of air, probably all the way down to 160 on the IWM, and
Yeah.
that's definitely not what you want to sit through, because after that it's begging and hoping for it to go back up. But for now, it does look bullish here. The IWM, it's back above its 20-day, its 50-day, its 200-day Ichimoku cloud. So those are the technical indicators, and that's a bullish sign. As I always say,
Yeah.
if we get back above those, if you see on the left, those moving averages and the Ichimoku cloud, it means the trend is higher until it's not. But that's what it is, and it's a bullish chart. I mean, bottoms always occur in a bearish chart and tops in a bullish chart. That's something else. But the trend right now is bullish. That's for sure.
Okay.
And
Everything's
so we
bullish.
remain bullish, and that's what we're for the S&P 500 as well. So question mark is, was this a wave 4 low? And here we have a detailed daily candlestick chart from the October 2022 low, where we instead of that ending diagonal, we're looking at a standard impulse. The only thing I don't like is that this red wave 1, which is a degree lower than this black wave 1, is longer in time and longer in price. Normally that's not the case, but it's not a error in the sense that's not allowed, right? The Elliott wave has certain strict rules. For example, the third wave cannot be the shortest, but there's no rule that says the 1 degree lower first wave must be shorter than the 1 degree higher first wave. That's not, but it's a little odd, but I've seen worse things in life. So this counts still reasonably well if my interpretation of this market is correct. What I like here is this red wave 5, based on this Elliott wave count, topped right here in the 176 to 200% extension, right? Just as I pointed out, that's normally what 5 waves do. So that's good. And then we had a fourth wave to about, I don't have it here on the chart, 123.6%.
Yeah, it was much
extension.
worse. And don't you think there was more damage done on this than what happened in April? That's why I'm surprised at the rapid rate of recovery.
Yeah,
was that an easing event? Didn't the markets turn? Because I mean, the yen keeps going, kept going lower after the carry trade unwind, but the market changed, I think, when authorities in Japan came in and bought the market after the Nikkei was down 12%. Right. They turned it, didn't they?
I wouldn't say it's only them, but it definitely, of course, provides liquidity support and mental support for of course institutions that mainly drive the markets to start buying as well, because they know they have the support of a big entity behind them.
Reminded me of the SVB bottom a little bit,
Yeah, I agree.
Panic.
Yeah, and it reminds
like a
me
bad event created the liquidity for another melt up.
Yes, it does. And those institutions, of course, know more than we do. They see the money flow and orders and all that stuff. And if they know that they're going to be backed by a very large institution like a central bank, they'll buy. And this is clearly what we're seeing. This is strong buying. But again, is this all of wave 5? Fifth waves tend to be very fast and quick and die out also quick, or is this only a 1 of 5? I don't know. I cannot tell the difference. I know if we go below now the August 5 low, then this whole wave 5 is over, because if this is a 1-2 setup, the wave 2 cannot go below the start of the wave 1, which would be the August 5th low. But so far, as you can see, if we're tracking here an impulse, we've not even completed this third wave of the 5th or the first wave. We haven't completed it yet. And we're still kind of waiting for the pullback. So as you can see, I'm zooming in more and more on the charts. This is the hourly time frame chart. So I still think we're going to top out pretty soon here, have a small little pullback and another rally. And then the market there can decide if it only did 3 waves up from the August 5th low, which will make it a large AB wave, because that's still possible. That is a B wave of a flat wave 4. So that's the alternative we're tracking. I can show the email I sent.
Irregular ABC if it makes a new high.
It is possible. We've seen that before in the market. The whole 2018, 2020 price action was a massive, large, irregular, flat wave 4, as you can see here. This was the third wave, was the top in 2018. Then we had an A, a B, and a C wave. This was clearly 5 waves lower, so that was a C wave. That was COVID. It was clearly, it was an almost picture perfect Fibonacci based impulse lower. And so we're now in this blue wave 5. So this has been a 2-year long irregular flat wave 4. So we could, for example, now see then the same on a smaller degree as well. So then we have just a couple of months or weeks of a fourth wave. Fourth waves are often flats, but we have done 3 waves lower. And as I always say in Elliott wave, after 3 waves lower, expect at least 3 waves back up, because we can get an irregular B wave or we get a new impulse. And some people say, well, which one is it? Well, I don't know. You just cannot tell the difference until you eventually see potential 4 and 5. That's something else. But the B wave looks higher from a trading perspective. The B wave looks higher and the impulse looks higher. So then you kind of go, what's your problem? It's going higher. Does it matter if we label it B? And we deal with that. The market will signal us if it's a B wave or a impulse by eventually holding above a certain price level or breaking below it. And that's why I have these, what I call warning levels for the bears here, for example, on the chart, and warning levels here for the bulls on the charts. So if we now start breaking below last Friday's, I believe it was, low, or is it last Thursday's low, it's a warning, because that's an important gap up, right? So this is how you stair step. If we then break below another important low and then etc., eventually, there is not going to be another green wave 5. We'll get the C wave lower. Very simple. For now, I think it's a buy the dip environment. The short term suggests we're going to see a few more pullbacks before we get there. And then it's question mark 4, question mark 5. If we get those, it'd be great. If not, then we don't. That's simple. I don't know. I can't predict the future.
Are there ever just maybe 1 or 2 alternate counts instead of having, and it probably, the counts change with your time frames, right? You get different counts with different time frames.
Well, here of course we go into this very small little gritty waves, right? We're looking here for a micro degree or a nano degree type of wave. Some people like to trade smaller time frames. Other people like to trade the bigger time frames. They just want to trade these B waves. But no, most of the time you have at least 1 alternative wave count. Sometimes things really get unclear and you have 2 or 3 or even more. It's like, wow, I just don't know what's going on, and that's fine.
So there's kind of a tell to, not to just stand aside when you have more than 1 or 2.
Absolutely. Yes,
alternates.
that is absolutely. As a trader, you say, well, your analyst, your expert is uncertain. Maybe it's time to step aside. It's like going to your doctor. Your doctor doesn't know what you have. Well, maybe you should take it a little bit easier. Or you're going to your lawyer and the lawyer says, well, this is a complicated case. Well, maybe you should take it a little easy in life and wait before till you have a little bit better idea, right? That's why you go to an expert, if I can claim myself as an expert. I think I'm an expert in other wave. But yeah, if we are very uncertain about where the market exactly is,
you are.
Then thank you. Then stay small. Cash is a great position too. If you were in cash,
it's illegal. It's illegal to go to cash. You have to rotate into another sector.
I always have to be in a position. No, please.
You get a red card.
My trading system was mostly in cash during this whole crash, and it's been buying since again. So that's great. We did not have to short or anything. Just sidestep it. It's fine. It's absolutely fine. And then when you get more certainty, remember here, I think August 6 or 7, somewhere around there, we said, it's going to drop to about this level. I think I don't even have it on the hourly chart anymore. I was looking for about 5,200 plus or minus 50 for this low here, and it's been working out elegantly, really nice. I did expect a deeper pullback here, though. I thought we'd drop back to about 52.80. All I only got was 53.50. But again,
are you covering gold now?
Yes, we've been covering gold for a long time, and we remain bullish on gold.
Okay.
Here, I'm going to pull up a slide here. Let's see. So this is my
Who
Metal and
isn't
Miners
bullish on gold?
webcam. Right. So this is my first slide from August 3rd when I came back after a month trip. And I said, upside's not done. I think we're still higher than the week after. We're ready to run. Yes, it keeps on running. And we're at the critical juncture in the sense that how much are we going to run? So I've been, since this one, already bullish since August 3rd when I came back, but I've been bullish on it for a long time. It's in a larger impulse. So yeah, we remain bullish on gold for sure.
Okay. And what's the best way for people to follow your work, get involved with you, Arno? How long have we known each other now?
Oh boy.
What do you think?
Uh,
5 years?
yeah,
3?
at least 5 years. At least
Wow.
five. That's right there. This is now 2. Yes, probably somewhere around there.
All right.
Best way to follow me, of course, my website. You can sign up for any of my services that I offer for people anywhere from the stock market to cryptos to gold. I do trade alerts for ETFs for Apple. I do trade alerts for Amazon if you're so desired. Secret service. It's algorithm based. You just get an email every day at the end of the day telling you what to do, or you do nothing. It's a recommendation. I'm not forcing anybody to go into any trade. You can do it for any ETF, long to the short term. You can follow me on Twitter at Intel Invest, of course, as well, where I occasionally post stuff. Not too much. It's just kind of a glimpse of what I provide to my paying members. Of course, they get the main dish, and here you just get a little bit of an appetizer. And I post stuff on well-known websites.
When's your next movie? Look at that movie star.
Thank you. Yeah, that's
All
when I
right.
was still young and.
How old is that picture? Come on, be honest with us.
That one is almost 10 years old now.
Okay.
So
I know we all use old pictures anyway.
I know. Yes.
You want to change it, and
yeah,
why not?
and,
Why not
yeah,
delude why not delude ourselves that we're still that young and we
I
look
know.
like that?
I
Huh?
know. I haven't changed that much though. I mean, back there I was
Sure.
probably, though I've gotten a few more gray hairs.
We all
and,
think
and,
we all
and a
think
few,
that everyone else is aging but us.
oh yeah, yes.
Anyway, Arno, over the years and you coming here and sharing your work, I want to thank you.
Thank you so much for having me again.
It was great. I'm glad I was here this time.
Yes.
Have a great trading season the rest of the summer into fall, and we'll talk after probably the crazy elections in November.
Oh yeah, that's going to be something. Oh
All
my
right.
God.
So
Yeah,
I
let's see.
hope we can
Let's
still
see.
talk to each other.
Yeah.
Then.
So for now,
All right.
I say it's buy the rumor, sell the news type of rally till proven otherwise. I think that's a healthy position to have, but that doesn't
Okay.
mean we should throw everything in the kitchen sink at it or throw the baby with the bathwater out of the tub. We'll stick with the price levels, but until then, enjoy the ride till it's over.
Check Arnaud out. And
Thank you.
thank you, my trading warrior brother. Thank you, man. I
You're
know
welcome,
it's tough
Bill.
work. It's tough work.
It is. It is. Yeah.
Everyone thinks it's a cakewalk.
If that was
Let
the
them
case,
try.
wow.
Let
Yeah,
them
let them
try.
try.
Let
Let
them
them
try. You can't get into the boxing ring without taking one to the chops. So
right.
anyway, thank you, buddy.
You're
You
welcome.
could join the team in 14 minutes on the morning edge. If you're not trading with a community, find one. And good luck today. See everyone tomorrow. Good hunting. Just don't just count your pips, count your blessings. There's got to be something out there that you're grateful for, even if it's not today's trading action. So take care, everyone. See you tomorrow, not Monday. I'm dreaming. Anyway, adios, everyone. Thanks again, Arnaud.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.